Hey, this is Mohan Kumar from Brainy Bulls. Welcome to another episode of Nifty chart analysis. In the previous video, we looked at the Nifty chart for April 10th, 2023. The kind of signals it generated while using the Triple Threat Intraday Strategy. So in this video, we're going to look at the chart, Nifty chart for April 11th and 12th, and see what kind of signals the Triple Threat Intraday Strategy gave us. So if you haven't looked at the April 10th video, please do go and take a look at it. We have discussed in depth about the indicators that are used, how they are overlaid and what kind of, signals it may generate. So in this particular video, we are not going to get into the details of what those indicators are. Rather, we will get directly into the price action patterns and how in conjunction with the the indicator signals we take trades. So let's quickly jump into the chart. So this is the trading view platform. It's a two chart view. So on the left is the Nifty, on the right is the Nifty futures, right? Nifty spot, Nifty futures, and it's on a 3 minute time frame. So triple threat, like I've been talking about that all the time, is it's nothing but no, we take the trades based on three signals, right? And we have three indicators which gives us those three signals, right? So those three indicators are laid onto these two charts. Though these two indicators, the concepts are the same, but the parameters and the settings used on this chart and on the other chart, the Nifty futures chart, are completely different. So I'm just going to bring the indicators on one by one. So the Nifty price, the price levels indicator are nothing but the location. So I use the daily pivot, the previous day high, low, and close, and also we have the moving averages, the three set moving average band, right? So all this, and plus I also bring in the resistance and support zones from the past price action and any major turning points from the previous day, right? So all these becomes the key locations for us to consider for the current day scenario. And the second indicator is the market participant, which actually confirms the momentum, because more the participants, the quicker the move would be. And since if you're trading in Nifty options, momentum is the most important factor, because the more quick the price moves, the more the option premium moves, and you make a lot of profits. Okay, so this market participant indicator, which are represented by dots, tells us the kind of participants who are involved at a particular point, in the price action. The third indicator is the trend meter, which talks about the weakness, the strength of the trend, right? If there is any, if the trend is in conflict with the price, if the trend is consolidating, if there is going to be any breakout or so on and so forth. So we discussed a lot in the webinar about these three indicators, how significant they are and what kind of signals we can expect at what time, at what times, right? And we also talk about the pre-market checks that we do, and the market checks we do post the market opens, right? And for the first 30 to 45 minutes, we simply observe the market. Regardless of what kind of move it makes, we do not enter into any trades until 9:45 or 10 o'clock. So we talk about the opens, like gap up opens, gap down opens, gap opens within the range, right? A flat open, and all that, right? Opens within two major key levels, like central pivot and the previous day, high or low. So all those constitute to a separate discussion, and we have a price action based upon those opens as well. So April 11th chart, it is a gap open. It opened right above the previous day high. At least on the Nifty spot chart, it opened above the previous day high, and it's a huge candle. And the price then steadily moved to the up, and it took some kind of resistance at the daily resistance, right? So we did not take trades until 10 o'clock. So the observation is the Nifty gap opened and it made a parabolic move. So any gap opens with parabolic moves should sell off in most cases. So we wait for signals and look at the trend meter. The trend meter clearly indicates that the price has peaked out, right? It is in the red zone. For your information, the trend meter is based on the stochastic indicator. However, it is not the same as the stochastic, the out of the box stochastic indicator that is available in the charting platforms, right? It is built using the stochastic, but it's a custom built indicator that actually brings in other parameters as well. And this trend meter is completely different from the normal out of the box stochastic indicator. So the trend meter is actually right at the red zone, which means it's overbought and it is bound to reverse. That's exactly what happened. But we do not take trades because since all the EMAs are steadily moving up, and the trend is still very strong to the upside, so we do not smell any kind of weakness yet, so we wait for the price action. So we look at the participation, we look at the trend, and we look at the location is okay. It is taking some kind of resistance. Look at the participation. There is a huge candle with some kind of participation. The blue dot is one of the key dots, and right on this chart we have two dots. Like in the previous video, we talked about the kind of participation. There are three, four colored dots now, which can be seen on the charts. So the blue, the purple, they're all like major colors, I would say. And as and when you see a big candle, right, with some participation, and if the trend is at peak, mark the candle low, right? And if the price goes below that particular candle, that clearly indicates that the price is actually losing its strength, right? So in this case, we want the price action to confirm if the price is going to go and test this particular level, right, in both these scenarios, right? And we also have a green EMA. So we wait for the price to actually retrace back to the EMAs and confirm whether the price is going to move further up or it's going to actually break and go further down. So in this case, we also have the participation candles that actually gives us signals as to whether the price is going to be finding support at these regions or if it's going to break. So in this case, the price went below the candle and it took actually support of the blue EMA, and the price actually moved further up. And we also have another candle with a purple participation dot. Okay, just mark the candle low as well. And we know for a fact that it peaked out. It is time to reverse and time for correction. And we know that there is a strong participation, and if that participation candle is taken out, the strength in the up move is kind of coming to an end. And that's exactly what happened. Look at this, another participation candle's low was broken by this candle, and this is where we take the trade, right? This candle high is the stop loss. So we talk about the stop loss points, we talk about the position sizing, like the trade management, the risk management, and the money management as well in the webinar. So this is where we actually take the trade. The low of the candle is the entry point, the high of the candle is the stop loss. Okay, and for the aforementioned reasons, this is the a proper location. Look at the trend meter, and it is actually giving us signals that the trend is moving further down, right? It's completely weak, and this is where we take the trade, and we actually trail our stop losses to the green EMA, and we hold the trade as long as the trend meter goes to the green zone, which is the oversold area. So this is how we actually got this beautiful move to the downside. Okay, and it's a very key zone, and hence we actually come out of the trade at this point, because this is the low of the morning range, or the low of the first candle. Okay, so we successfully took the first trade, and we got a good profit of like 40 points on the futures chart, which actually corresponds to a 20-25 point move on the options, at the money strike price. Okay, so it's a great position that we had on this particularly the first trade. Let's quickly see if there are other signals that the strategy has given us to take the second trade for the day. Cool. So I'm going to clean the drawings on both of these charts. Perfect. So we know that the price is down right here at the low of the morning range, right? It happens to be one of the key locations. So we also keep drawing the support and resistance lines as the price action makes on the current trading session. Okay, so this happens to be one of the locations, where the price actually took a support and made a parabolic move to the top. So there could be a lot of buyers waiting at this place. There could be a lot of participation participants entering at this particular zone, like, and the trend also, it indicates that it has bottomed out, like it's at oversold region, and it may actually reverse at any point in time. So we do not take trades right here, because like we mentioned, in the case where the price was at the top, the same explanation when the price is at the bottom, right? So the price is way below all the EMAs, right? And so we need to actually see some kind of strength before we actually get into the long position. So we wait for the price to retrace back to the EMA. So you could see the EMAs have flattened out, right? So we wait for the price to actually catch up with the EMA and see what kind of price action it gives us, around the EMA levels. So our expectation is, once the price goes and makes a pact with the EMAs, the price will have to come back to the same low point, or it should make a higher low, right? Which would further confirm that this is a great support region, and the price will move further up. So in this case, the price actually went to the EMAs. As you could see, there was some strong participation in this candle, but also there is another key level, right, which is the previous day high, and it took actually some kind of a resistance there, and the price actually came way below this. And look at this. This is the region we are looking at, where the price stalled, and actually the price actually had some sort of a retracement to the EMAs. It comes back here, and look at the candle patterns. Candle patterns, again, we talk in depth in our webinar about what candle patterns are pretty significant. So one of the candle patterns that I am kind of like very much favor of is the morning star and evening star, right? So there is a bearish candle, and there is a kind of a doji, and then there is a bullish candle. So it's a very good candle pattern, and we do have the location. We have some kind of participation here, and look at the trend meter. It confirms that the trend is pretty much moving to the upside. As you could see, the price almost came back to the low point, okay, but the trend meter confirms that the trend is like midway, right, between the low and the high point. So it's a strong trend indication. So we actually take our trades right at the high of this candle, and this low of the candle is our stop loss. So we have a very limited risk in every single trade. We risk one candle, but the profit is unlimited. We wait as long as the trend meter reaches to the other end of the zone. So from oversold to overbought is our range to take profits, and we trail our stop losses, right? So in this case, the trend meter, look at this chart. It moved almost to the red zone, way past it, and then this is the peak, and this is where we take our profits, right? So we entered the trade here, and we exited here. So it's a very good trade again, a nice move to the upside. And you saw, this is a candle where we would have taken our profits. There is a participation, which means that whenever there is a participation at the top, it indicates that there are some transactions happening, and the price will actually see some kind of correction. So when if you're seeing participation at the very bottom, like the price is bound to move higher. If you see participation at the very top, the price is bound to move lower. And since we are trading in options, this participation signal is the key factor to actually take profits. And the moment you see a lot of participation coming into play, we actually take our profits based on the trend meter. Okay, so it's another good trade. So we had two trades on April 11th. One long, right? This was the long trade, and another one was a short one. So two good trades here. So the first trade, to recap, the first trade, it actually took resistance and retraced back to the resistance, forming a candle right here. Okay, and on this particular chart, it's very clear that this candle actually closes below the participation candle here. And look at the trend. So it's clearly indicating the downside move is pretty strong. So we took this trade. The second trade is again from a key location. The price retraced back from the low point to almost close to the low point and making a higher low. And the trend meter also confirms that the price is going to move further up. And exactly that's what happened. So two great trades on April 11th. Okay. So we discuss a lot about the price action patterns, the candle patterns, different openings, opening based, price action, everything in detail in the webinar, right? And the key or the core is three conditions: location, participation, and the trend meter signal, right? So based on this and the price action, we take our trades. So let me clear the drawings out, and we can quickly move into the chart for April 12th and see what kind of signals the strategy gave. All right, so great. I think it is pretty visible. I'm going to just enlarge it. Okay, cool. All right, so as you could see, the checks that we do, the moving averages are steadily raising up. The price opened at a key location, which is a central pivot range, a major location, and the price actually it's a kind of a flat open or open close to the, it's a small gap up close to the previous day high. Okay, and look at the price action for the first 30 minutes. The price opened at a key location, it went past the previous day high, right? And the moving averages are like moving steadily on the upside. So we are expecting the price to retrace back. Look at the trend. The trend is not peaked out yet, right? And we are looking, and since the price is way above the previous day high, we're looking for the price to either retrace back to the previous day high zone or to the raising EMAs. And and based on the signal that the trend meter and the participation indicator gives, we take the trade. So in this case, we wait for good 45 minutes up until 10 o'clock. The price retraced back from a key a pivot point, and it moved into the EMA zone. It almost close to the low point, right? The morning low, right? And it took support at the EMA, one of the major EMAs here. It took support right here. So we don't take trades. Look at the trend meter. There's a kind of a conflict. So the price actually made a higher low, but the trend meter confirmed that it makes a lower low, right? It's very clearly seen right here from the starting point. This is the trend meters, a lower low, and on a price chart, you could see the price made a higher low, right? On both of these, you get to see the price trend conflict. This indicates two things, the strengthness in the up move and the weakness in the down move, right? This price trend conflict, and the location is key. The price is at a key location. We also have a very great support to the CPR, and the price is kind of like, no, we don't see any kind of major participants, all the way in this down move, which means like, the price is bound to move higher, and that exactly what happened. So the first trade is based on this candle. So we did not take the trade here because it's right in the middle of the EMAs. We want the price action to confirm that whether this EMA is going to be, acting as a good support. Exactly what happened. The price moved and then retraced back, and again there is a good candle here right from the EMA, and this happens to be the place, as for the trend meter and as for the location, as for the candle pattern, price action is where we take a trade. We enter. Okay, so let's see how this trade works out. All right, so the price moved steadily, right? And it actually went past the previous day high, and it retraced back to the previous day high. We're still holding our trade because the trend meter has not peaked out yet, and the price action also confirms that it's taking some kind of support at the previous day high, and then it moved further, and right at this pivot resistance, and we see some participation, and the trend, it also, it's in the red zone. So we don't take our chances anymore. We wait for a red candle, and the moment the price actually, goes below the first red candle that appeared at the top, this is where we take our profits. So it's a very good trade to the upside, right? So we risked one small candle right here, and we actually had a very good um, we made a very good profit on this particular trade as well, right? So this is our first trade. Let me quickly remove the drawings. I hope I'm making things pretty simple and easy to understand. I know I'm not discussing everything that is covered in the webinar. There are a lot many patterns and price action analysis that we talk. And when we connect the dots, in the webinar, the content is pretty organized, and it's structured, and in a way that you'll be able to easily see the price action patterns and the signals. And you know uh, all with all this, you'll be able to actually find out the trades. It's so simple. Okay, so the first trade, it worked out in our favor, and we wait for the price action. The price is taking a resistance at this point. Okay, it's almost the point where the price reversed in the morning, right? And it's going back into the EMA. So it's a very good location, as you could see. The candle pattern right here, the candle pattern that I usually look for, and the location, and the trend as well. Okay, the morning star pattern, right? Okay, and there is a candle, a colored candle as well, which indicates some kind of participation. And the trend meter, again, it confirms that it's almost down. But the price action, if you look at the previous low point, the price is in conflict with the trend, right? As you can see, at least on this chart. And there is another low point here, and this price is pretty much above the previous day. So there's a lot of confirmation based on the trend meter, the location, the participation. It all gives us an indication that the price is still bound to move higher. So we take our second trade right at this candle. So this is our candle that we risk, and we wait until the trend meter peaks out, and this happens to be the trade of our day. It's such a big move to the upside. The trend actually, you could see the trend meter. It steadily, the price moved, even though the trend was like kind of like up and move, and finally it pushed itself into the overbought zone. And this is the candle, the green candle, is where we actually book our profits. So it's a wonderful trade. Two trades, on both on the upside, based on the price action on April 12th. Okay, so we could have actually taken our third trade if we are an aggressive trader. It also gives us a signal for the third trade, but usually we refrain from taking trades post 2:30. Unless if there is a strong signal that the indicator gives us, we do not enter into any trades. So this particular day, the price moved above the resistance. We don't get into the trades, even though the trend meter indicates that it's peaked out. We don't take the trades right there. It has to catch up with the EMAs. And the point, the resistance point, it actually broke out, right? So it retraced back. And is it moving further higher? No. You could see some weakness, and you could see the trend meter, it is steadily falling down, right, on both the charts. And there is some weakness. There is a participation candle right here. And if you draw the line, okay, so this candle, this is the place where it's again reversing, and this could have been our third trade for the day, right? And look at the trend meter, it went all the way down to the green zone. So it's another beautiful third trade. If you're an aggressive trader, if you take more than two trades a day, and based on the signals, because today was like a great up move all morning and all afternoon, and the price is bound to make some correction if there is some weakness seen. And this exactly is the place where some weakness was seen, right? As you could see here. And so that is how we look for patterns, and we look for uh, the signals from these three indicators. And it's a confluence of all gives us good entries and good exits. So we discuss a lot in our webinar. If you really like what we are discussing in this video, right, and please do like this video, and please do subscribe to my channel, to get timely updates on any new videos that I upload. So the online course, if you haven't looked at the promotional video about the online course, please to have a look at it. And also, I have made a course content video. The course targets, both beginners and intermediate. It's an end-to-end package. It is not just the strategy that we're going to talk about, even though that is going to be the major portion of the webinar. It's going to be covering all the topics, right, from the basics all the way up to trading psychology and other advanced topics, right, like price action patterns and everything. It's going to be a private webinar, right? It's not going to be done in batches. It's a private webinar so that I can tailor my content based on your expertise in stock market, and that way, we could use our time effectively. So if you're very much a trader already, if you want to know what this strategy is all about, how these indicators can be used and everything, I could actually get that webinar done only around the strategy itself and remove all the other topics, right? And if you're a beginner new to the trading business, then we could actually have other topics as well, right? So please do check out the other videos. And I'm just going to come up with another video on the chart analysis for April 13th. Until then, it's bye from me, and thanks a lot for your time, and take care of you and your loved ones. Thanks a lot.